Hi everyone, good morning, good afternoon, and good evening. This is Ricky Avelino for your business briefs. Before, if you want to be updated in the news worldwide or even in local, you need to read your daily newspapers, especially in business. If you want to be updated before, of course, you need to read books, magazines, and the daily newspapers. But now, because of the internet, you can be updated worldwide, anywhere, anytime, wherever you are. That's why this in your business briefs, I will share the updates about business, what is happening worldwide, so you to be informed and you will know what to do. Guys, Elon is out. By the way, this is published last February 16, 2023. Elon Musk plans to end his reign as Twitter CEO by the end of 2023, so long as he finds a suitable replacement. Wow, that's a great news. Big news, guys. If he lasts the rest of the year, he will have been CEO of Twitter for roughly 14 months. That would be 1 month longer than Twitter's last CEO, Parag Agrawal. What is the average amount of time that a CEO holds their title? A. 1 year, B. 3 years, C. 5 years, or D. 10 years? Hey, watch the video until the end so that you will know the answer. Let's go to innovation. It's lit. When humans discovered fire, it was kinda very big deal. Now, two entrepreneurs are rediscovering it. Texans Jeff and Spencer Jan released their product, the Solo Stove, via Kickstarter back in 2016. Its goal, $15,000, which it ultimately reached in about 2 hours. Overall, the Kickstarter backfire, it brought in $1.1 million in interest from users. Today, the company's Solo brands and its flagship product, the Solo Stove, is worth $406 million. Wow! The stove takes a new spin on traditional campfires as it allows anyone to build a fire from anywhere. Because of its advanced double walls, small size vent holes, and vacuum effect, its fires burn hotter for longer. As of 2020, the company recorded $130 million in revenue and is looking to gain a $1 billion valuation sometime soon. Its secret? Take something old and make it new. Entrepreneurs will often get stuck trying to come up with a revolutionary idea that no one has ever heard or done before. But the best ideas come from solving a need within a market, which means you don't always need to reinvent the wheel in order to see success. Let's go to digital. All eyes on you. A new competitor has entered the searching space and hopes to take down the industry giants Google and Microsoft. U.com is an AI search engine that builds responses to consumer questions based on generative technology. Its latest gadget, multimodal search. This update allows users to build on their questions, and instead of generating a typical text response, U.com will find exactly what you are looking for. U.com is using AI to not only answer the questions, but to generate info that's not even on the internet yet. Creators can use this as a resource to better create and generate content at the touch of a button that can help them get ahead, while nearly all of these platforms are free to use. Quite the character. Tired of character counting? Well, Apparently, so is Twitter. Social app will soon allow its Blue members to post tweets up to 4,000 characters long. For everyone else, the limit will still be 280 characters. Why the change? Twitter is adding more perks for its paid Blue members and is hoping the changes keep them more engaged. Users have managed to dodge the 280 character limit thus far with long thread posts, which may now go out the window with this new change. All these changes open new opportunities for Twitter creators to create more interesting and engaging content, which can help them grow and cross-post on their other platforms. Advertising ins and outs. In. Retail media and CTV ads are becoming quite popular for marketers in this economy. These ads focus on user and customer retention rather than new acquisitions. Getting hot. Trade Desk reported a 24% increase in revenue as a third-party provider of retail ads. Its data showed that ads aimed to retention performed 12 times better than ads aimed at acquisition last quarter. Out. Advertisers are losing their footing right now due to company subscription models. A saturated streaming space and ad-free services mean brands can get their message out to consumers. Ad-supported tiers are becoming costly to advertise on as a result, thus generating less money for everyone in the ad space, causing the industry and budgets to slip further. Trends. Burn, baby, burn. Startups looking to ride out this economic and funding downturn need to manage one thing better than anything else: their burn rate. Burn rate? The rate at which companies spend their cash or funding to finance its business is known as its burn rate. Over the last few years, startups and VCs had a grow at all costs mentality. Today, expectations are different and VCs and angel investors are looking at firms' burn rate as a key indicator of its success. Companies that are burning too much cash right now may be seen as a bad investment for VCs. A steady burn rate hints at profitability and sustainability, which is the new name of the game in 2023. Burnout or fizzle out. The road to sustainable burn rate starts with a strong financial plan. Startups will want to consider their current and projected financial standing, what their break-even point is, monitoring and managing cash flow. Yes, startups need to prepare for the possibility that funding could be dried up for the next year or two. In short, how will they manage without any new VC funds? Some founders may want to seek new funding, like with a fresh line of credit. Others may want to cut costs or even eliminate some debt. Sustainable burn rates require an in-depth and realistic plan, as well as clear communication with investors and employees on what company goals are. And if done correctly, startups can thrive during a downturn and ensure a bright future ahead. Funding. Ride the wave. Investors are riding a new tech wave that's sweeping through the startup world. However, this new trend really isn't a trend at all. Before AI, crypto ruled the VC world. Before crypto, it was robots and logistics startups. At the turn of the century, dot-com companies ruled the land. The difference now? VCs are trying to be more diligent with their investments. VCs want to be on the cutting edge of innovation, but added due diligence will keep them out of another FTX situation. Firms are now branding themselves as AI startups, even if they work very little with the tech. Transparency is important. for long-term success. So VCs and startups should be open and honest about who they are and what they want when making deals. What's the password? Companies have been battling hackers and password scammers for years now. But in a world without passwords, there's really nothing to steal. That's what startup Descope is hoping for, and just raised $53 million in order to get it done. Its tech allows developers to create their own method of account authentication that supersedes passwords. What's even better is that developers can create their authentication without any coding experience. The more complex account verification methods are, the harder it will be for hackers to steal info. That keeps employee and customer data secure and safe. But above all else, as long as there are still problems that need to be solved in the password space, VCs and startups will be ready with their cash. Let's go back to the quiz. What is the average amount of time that a CEO holds their title? A. 1 year, B. 3 years, C. 5 years, or D. 10 years. The answer is CEOs usually start leading at the height of their experience. 10 years is oftentimes the max. But not always. The longest serving CEO in the US is Warren Buffett, who's been the CEO of Berkshire Hathaway for 51 years. Again, this is Ricky Avelino for your Business Briefs, published February 16, 2023. Again, as I always say, you are here not just to start, but to finish the race. God bless everyone. Be great. Bye-bye.